What's really good? What's really good? We back at it again. If you aren't on my Instagram or in the Discord, then you wouldn't know, but essentially just finished the week with a 100% win rate, trading options. Been trading options for the past month and a half, and it's been about 80 to 90% win rates at the end of every week. This is the first 100% win rate. Obviously, all the trades that I take are also signaled within my Discord, in this case within the option signals channel within my Discord, which those signals went 6 for 6, 100%, and I went 7 for 7, 100%, because there was one trade that I wasn't able to signal because it just happened way too quickly, which I'll explain in this video. But absolutely beautiful week. I'll be going over majority of the trades that are based off of the overall video basis, but I'll still show y'all all the trades that I actually took this week, which I'll put up right here. Again, went 7 for 7. Had a day we went 3 for 3 within one day. It took 3 trades in like an hour. It was absolutely great. But yeah, so essentially this video is going to be just talking about, we're going to be using the trades that I took this week and signaled this week to explain the overall strategy that I've been using within trading options, which ultimately is primary liquidity, which I've already talked about 100,000 different times when I was trading my index markets, but I brought that to the options trading, and overall some more reiterations and explanations on gaps. So let's get straight to it. So I know I already put all the trades in a group a second ago, but each trade and each market that we get to, I'll put the trades that I actually took, the little photo of it right here. So I'll put that right there. For this one, this is for SPY. This is a trade that I signaled Thursday, which worked absolutely beautifully. But essentially, going into the primary liquidity, let's start with that first. Primary liquidity, if you don't already know, first off, I have a video on that. Great video, which y'all blew up. Love y'all guys. Appreciate y'all. God bless y'all. But essentially, primary liquidity are the big liquidity points that the market actually wants. Yes, the regular higher highs and higher lows and whatever, you know, the highs and the lows are little small points. So like here and here and, you know, here and here. Those are what I call standard liquidity points, the small liquidity points that the market can either just break past and do absolutely nothing towards, or it could have a reaction depending on what it has on the hit list. And the hit list is essentially the market will seek out a specific level of liquidity, whether that's standard or big, just so it could seek out more and bigger liquidity points, whether that's below or higher above. That's essentially my primary liquidity strategy. It's just huge, big, just big overall primary liquidity points, so like daily lows and highs and 4-hour lows and highs, and overall looking at how price is moving, how it's reacting, and the overall momentum and pressure within that candles in a certain direction lets me know that, hey, we're seeking out this big liquidity point right here, and there's no doubt about it. But with this trade, essentially within the options, the primary liquidity points are still the daily highs and 4-hour highs and lows, but also the market open highs and market open lows, because those are going to be the biggest liquidity points in the closest region once the market opens. Market opens for me at 8:30 a.m. CST, probably opens for you at a different time unless you're in the same time zone. But essentially, we opened up bullish here. Let me move this. We're at 559.70. We opened up bullish here, pushing up a ton. And then the next candle came and swept the market open high, and then came crashing back down, sweeping the market open low. Again, the biggest liquidity points that are in a closer region. And those all got seeked out. Not only that, but what I've noticed a lot recently is that price, in this case, when it came back, pulling back all the way down here, it also landed directly on a 4-hour low. I'm sorry, a 4-hour high, which is based off within this area. Again, it's in the picture that I already put up. And essentially it came back and retested. And, you know, I was thinking about just like, you know, with the gap, it kind of looks like it jumps over it. So whenever it comes to pull back, it kind of retests that high just to push up more is what it looks like, especially it being within the gap, which is even more just confluences towards it, pushing more upwards, which is exactly what this did. And then ultimately, price is coming back within the gap into the 25 to 50% range of the gap, which I mentioned in last week's video, is if price doesn't react immediately off the top of these borders, the top and bottom, so, you know, right there, then it usually likes to react about 25 to 50% within the gap. And that's when you start to see most of those rejections and reactions to the opposite direction. And again, with the gaps, Gaps are based off of the close of the previous day. So here, closed here, and the open of the current day. It opened here on Thursday, right there. And then that's where you get your gap, essentially. And what I mean by there's usually a lot of reactions when it taps directly on the top and the bottom of these borders is because there are a lot of orders within those areas that price likes to essentially get a ton of volume and volatility off of that you can see and take really big and longer trades that won't take as long time wise. But back into this, essentially, price swept the market open low after sweeping the market open high, retested on the 4-hour high, also went about 25 to 50% within the gap, and that's when I went into the options signals chat. So obviously I got my own Discord, has all the signals, etc., and I told everybody, hey, we're going to be looking for call options at said strike price, and we're going to be holding it to the top of the next gap. Which we did have a rejection, but it did push up some more before slamming all the way back down. So very thankful we got out. This was almost a 1 to 5 RR. Beautiful trade. Took maybe 20-ish to 30 minutes. And yeah, just took this all the way up there. Beautiful entry, as you can see. Absolutely just beautiful. Tight stop loss. Big RR. That's what we like to see. And again, this is based off of just price reacting to primary liquidity, reacting and looking at how price is actually moving and the momentum within the candles after it sweeps those certain areas and seeked out those certain areas, moving to seek out other areas of liquidity. Now we're in NVIDIA. We were just in SPY. We're going to NVIDIA. This is the day that we went 3 for 3. 2 for 2 in the Discord, 3 for 3 for myself because the second trade that I took, I wasn't able to signal, which I'll explain in a second. But essentially, this case, I know it shows bearish, but it was a bullish candle. You could tell because it closed up here and opened the next candle there. But essentially, we had the current day's gap. We also had a previous day's gap. We had a 4-hour low, the market open low, and an old daily low right there. So seeing all that sell side pressure, I already knew it was seeking out that old daily low all the way down there. And then once I started seeing the long wicks and the strong rejections, honestly could have gotten to this trade a lot earlier, but I just wanted to wait and just get more confluences and more confidence to get into this trade, which eventually put the signal out that we were looking for some call options on NVIDIA at said strike price, whatever the strike price was. And boom, took probably like 7.5 minutes because this is about half the time of a 5-minute candle from getting out and getting into the trade. So about 5 to 7.5 minutes. And we took it to the market open high because clearly with that all after the market was clearly seeking the primary liquidity below. So the market open low, the 4-hour low, and the daily low, it showed tons of buy side pressure. And guess what? There's also primary liquidity above, which is at 4-hour highs, market open high, and then just some standard liquidity points, which as we can see here, after we got out the market open high, price pushed all the way up and rejected immediately off of the standard liquidity point. All right. Which this is when I took a put option right around here-ish. Let me fix this really quick. Stop loss right above the low. Got to keep it tight. You already know. And we took it we got out at the retest of the overall gap. It was actually a 1 to 2 RR. So we'll just do that. All right. And yeah, again, this happened super quickly. As you can see, this took probably like 2.5, 3 minutes and just crashed all the way down. So we took that. I took that. I wasn't able to signal it because, again, it just happened too quickly. But I was able to signal this trade, which we went long again with some call options on NVIDIA. Let me move this out the way. We entered off of the immediate retest and reject right here, but price ended up coming back down a little bit more and going 25% within the gap, as you can see about there, a little over 25%. And gave us a long wick and a small body to the top. I honestly should have just closed the position and re-entered with a better entry, but it's okay, is what it is. And then we ultimately took it all the way up to the last standard liquidity point within the area, which I was expecting it to react off of, especially with price closing below the liquidity level. But it didn't, kept pushing up more before it gave some more pullbacks and finishing and et cetera, et cetera. But yeah, so this trade was also based off of price clearly seeking out this primary liquidity point, hopping into a position because we know that it's going to seek out this primary liquidity point next, and just going liquidity from liquidity and retest within gaps and et cetera, et cetera. And yeah, ultimately beautiful trade. I went 3 for 3. Discord went 2 for 2 on that day. This was Tuesday, I believe. To just overall Friday's trade, not the last trade. Well, the last trade, but you get what I'm saying. Essentially, this really wasn't really based off of any liquidity, but essentially, because all the big liquidity points were either super high or super all the way down, and we were just nowhere near that. But essentially, price came down, pushed all the way up, and we had the gap from the close of the previous day. So right there, let me get them more on the shmoney. And then the open of the next day. And as you can see here, it retested and literally landed directly on the top of the border. And as you can see here, the body is all the way down there. Pushed all the way from freaking 230 all the way down. The wick went all the way down to 229.41 to 229.52. It went all the way up, reacted directly on the border, and sank all the freaking way down. It was obscene. So that's when I put in the Discord option signals that, hey, we're going to be looking to get into some put options at said strike price. Boom, retested, rejected directly off the line, and we took this all the way at the low here because wasn't really expecting, nor did I want to risk possibly trying to take, the trade all the way to the bottom of the gap or any liquidity below, which thankfully we didn't. And there's no need to be greedy, nothing like that. So just took it at the low that was based off of this overall pullback. This was almost a 1 to 4 RR, gave us 106% profit gain. It took about 20 minutes, 20 to 25 minutes, I believe. Absolutely just beautiful trade, super quick, high profit gain. It's been a while since I've seen 100%, especially that quickly. It's usually about 38 to 50%, which is still fabulous. All right, and then price then came down some more and then pushed up a bunch, sweeping some standard liquidity points. And as you can see here, retested directly on the line of the previous days or the previous week's gap, directly on the top of the border, just like it did here, and then sank all the way down. But yeah, that's overall just a strategy I've been using since I've been trading options and implementing that into my Discord with the signals and et cetera, for the past month and a half-ish, about to be a month and a half. And yeah, it's been absolutely beautiful. The gaps, as you can see here, from all the trades that we took this week, previous trades, the last video that I put out last Saturday, the gaps work beautifully, especially when you implement the primary liquidity points, especially the market open highs and lows, waiting for price to sweep that out and looking to take positions in the opposite direction once that gets swept out, because it's a big liquidity point, But yeah, that's overall just an overall strategy and technique. Everything that was used and done this week, again, 100% win rate. Give all praise and all thanks and all glory to God. And yeah, Discord's free, especially the signals, because you got no business paying for me, especially if you take a loss, even though my win rate on average at the end of every week is about 80 to 100%. And at the end of every month is an overall 90%, which is all praise and which is all blessings from God. Give all glory to him. Also, the mentorship still got 2 first-time free sessions for anyone who's new and hasn't used them yet, essentially, so you can see if I'm the right teacher for you and can explain all the information and value that you need in a manner that you're able to learn from. And then my Instagram, I put all my trades out live on there so you can see everything that I do. And yeah. But yeah, you can like, subscribe, go to the gram, whatever you want to do. I'm just trying to help some people out. I'll see y'all.